Hello, good people, and welcome to G World Markets Academy. Today, we are going to have a very interesting discussion on what moments are you supposed to take positions and what moments you are supposed to be off the markets. And if you have not subscribed, kindly subscribe and be part of the GMA family. Taking positions in the market majorly depends on which plan you have and which strategy you are using for your trading. But there are moments when you decide, I am taking positions based on a number of checks. Say, for example, you've looked at support and resistance. You have looked at a trending market, maybe trending upwards or downwards, and you take your position based on that analysis. Or you could take positions based on, say, fundamental news coming up, and which might lead you to being either in or off the markets. But we have moments which have been proven it is not good for any trader who is serious about trading to take positions. And one of those moments is immediately after you have been stopped out, or immediately after your stop loss has been hit. Remember, immediately after a loss, the natural reaction is to feel bad within yourself. There is a lot of emotions coming out because what you have lost is a commodity which you have attachment with. And most people will feel bad about it. Even professionals will feel about it because nobody wants to lose. But how you react immediately after that is what determines if you are successful or not. Because people will come in and say, I've lost my money. This is money I've been trading and profits I've been gaining over, say, 2-3 days or 3 weeks. And now it has been wiped out by one single position. You say, it's not possible for me to lose. I must recover my money. Now you start emotional trading. Emotional trading because you want to recover the money you have lost. And at that point, you are susceptible to making mistakes because you will have no plan. You will trade any position, any level, or any support or resistance level you have seen. You just take a position based on the loss you have incurred. And that is called revenge trading. If you start revenge trading, basically because you have lost, you will make many mistakes. So what are you supposed to do? Calm down, get off your screen. You can take a walk, maybe 5-10 minutes, relax, then come back on the screens. Then once you come back again, don't trade following up on the loss or trying to run after the loss. Look for another opportunity for you to enter into the market. It might come that day, it might come after 1 day or 2 days, but don't try to chase the loss. The moment you start chasing the loss, you will be missing. And you make mistakes which will ruin your account. So immediately after a loss, a stop loss has been hit, please don't take any positions because that will be emotional trading. The other moment when you are not supposed to take position is immediately after you have hit take profit of a very good run or a very good position. Again, there are emotions which go through your mind or your body which are positive. Positive in a way that you're feeling so happy, you're feeling excited. But this is what is called euphoria. You can go ahead and call your friends and tell them how you're making it with Forex, how you made money within a very short time. In that time, you're thinking now you're invisible, you can't make mistakes, you have learned how to hit out at the markets, you've outsmarted the market, and you can take any position anywhere. Remember, with that emotions running in yourself, you are susceptible again to make mistakes because you want to build on the profits you have made. You want to make it big. Now you can take bigger positions. But these big positions, you take them without looking at any plan. You are being driven by emotions. You're being driven by euphoria. Something in you is telling you that now you've become a star. You can take any position and you can win. That's not the right time to analyze the markets. calm down again. Take a walk, 5-10 minutes. If you are a day trader, get back again on the screens. Take a look on the markets. If there is no opportunity, please don't take a position. Wait for the right moment. Wait for the moment when all the check boxes will be ticked, maybe support, resistance, trending market, upward or downward, or you're using whatever fundamental analysis you're working with, until you get that right or the opportune moment for you to get into the markets again. But if you're taking positions out of those emotions, you can be sure the probability of you making mistakes are so high because you're not using any plan, you are trading based on emotions. And from time to time, we have said any win you take, it's not because of how skillful you are, because you can have all the strategies, all the books about trading, but at the end of the day, you make losses because 70% of this game is not about the skills you have, it's about the mindset and how you manage your emotions. Because once you trade with emotions, whether you have lost or you have gained, the probability of you making mistakes are so high. So immediately that happens, keep off the markets, wait for the right moment, and make sure that all your check boxes have been ticked before you start all over again. That brings us to the end of our discussion today, and I believe you now know what are the right moments for you not to get into the markets. Kindly leave us a comment, subscribe, and hit the notification button so that you'll be notified once we release our next video. Thank you, and bye-bye for now.